Bitcoin is now just a few percent away from confirming a breakdown below our macro upward sloping trend line. This is perhaps the last line of defense for the bullish argument here in this market cycle. Things are definitely starting to look a lot more uncertain in the markets. Just the other day, the Fed raised interest rates by 0.5%. The stock market had a quick rally up after that news, and now today is seeing a very, very fast reversal. We're now down over 4% today for the S&P 500. As I'm making this video, the price of Bitcoin is actually continuing down. We've had a very, very quick dump today in the market, and by the time I upload this video, I don't know, maybe things are going to look even different than this, but we're going to be discussing all of this and more in today's video. What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be discussing the price of Bitcoin. So over the last many weeks on my channel, we were discussing, well, all the bearish signs that were showing up on the chart, all the downside risk, the weakness that Bitcoin was showing, and we also discussed how we would know when the bottom comes in. And we talked about my favorite indicator, the Coinbase weekly volume, my signature indicator for calling bottoms and tops, and how that's really when we would know the bottom is in, and that it's likely that the bottom is not in yet. And now today, Bitcoin is showing even more weakness, even more uncertainty, and it's becoming extremely likely now that we're going to see lower lows on the macro scale, which could likely send us into a bear market, a downtrend. Now, why is Bitcoin going down today? Well, we've talked about the correlation between Bitcoin and the stock market, and today is a very bloody day in the stock market. We see the Dow Jones down over 3.5%, NASDAQ down over 5.5%, the S&P down 4.2%, a very, very bloody day in the stock market. And it's pretty obvious why this happened. It's because the Federal Reserve has raised interest rates. Usually raising rates is not favorable for assets. And the Fed made a statement saying that they're now targeting interest rates in the range of 0.75 to 1%, with some officials advocating for 2.5% by the end of the year. So they're going to be doing incremental increases in the interest rates over the course of the year. And so it's starting to look a lot more likely that we are going to be seeing a downtrend and a possible bear market now for Bitcoin and possibly for the stock market. How it's going to look, how it's going to play out is hard to tell. So what we're looking at now is the monthly chart for Bitcoin. We're looking at the 20-month EMA. That is the moving average that we're seeing here. We have the halvings marked up. And Bitcoin currently is at a very interesting point where normally at this time period, right, at this time period after the halving, we play out a breakdown below this 20-month EMA into a bear market, right? About this amount of time after the halving, normally we get a bear market with a breakdown below the 20-month EMA. And if we're looking at this moving average, right, the 20-month EMA, we've had our first monthly candle close below it, which in every other cycle, when we do that, we see multiple months, 2 to 4 months at least, to the downside until we find a bottom. And we now have the 20-month EMA starting to actually go from being flat to pointing down. It's starting to point down. So basically what this means is when you're looking at these long-term moving averages and they start to flatten out, right, flatten out, and the price action catches up with them, it means that the momentum and the trend has died out, and we're likely going to get a shift downward, right? A shift down below these long-term moving averages. And that's very likely what's about to play out for Bitcoin, right? 2 to 4 months down, possibly 2 to 4 months down, we find a bottom. And after that, we look to trade sideways going into the next halving. That is what I think is the most likely outcome here. What is the most, common thing for Bitcoin to do is something along these lines, right? So the interesting thing is that, at least half of the downside has already played out. It's just that final portion, which is typically 2 to 4 months down. That's what we're basically coming up against now. That's what's facing us now. That is at least what I think is most likely. And if we look at all of our cycle charts, right, from cycle low, we're looking at cycle top, and then since the halving, we're pretty much on track here with the 2017 top zone, and then we would likely be entering some kind of downside capitulation, right? Since the market cycle top, we actually topped before 2017, according to this market cycle chart, since the previous market cycle top, we're actually ahead of 2017. And if you're looking at Bitcoin days since the halving, Bitcoin has also topped out pretty much right alongside the 2017 cycle. And we're probably going to end up seeing some kind of downside consolidation before the next halving. We're really just lined up perfectly. We're just timed up perfectly with those previous cycles, falling below long-term moving averages. The momentum is down. The interest is down. The stock market's not doing so good. The Federal Reserve is planning to raise interest rates incrementally. I mean, everything is kind of just saying, look out for downside, be cautious. It's kind of like a risk-off time period, guys. It's not the best time to be taking a lot of risk right now, right? The time to take risk is after we've seen, tremendous downside and everything's boring, kind of bottoming, going sideways. That's when you want to be taking more risk. The time to take risk is not right now, in my opinion. Wait for things to sort of, play out the downside, cool off. And then once everyone thinks it's truly over, that's the time to be, buying Bitcoin. And that time is not yet now. There are still people out there that have hope. Another thing that I wanted to bring up was the Ethereum chart. This is Ethereum, and how this market structure for this current bull market is strikingly similar to the structure of the last bull market. How we've had, major run up, a higher high, a lower high, and then a breakdown, right? Major run up, a higher high, a lower high. It's looking like probably a breakdown is coming, guys. The psychology of how this market cycle played out versus this one is looking very much the same. We kind of have what you would probably call a decrease in momentum, right? Head and shoulders. That's what that indicates, decrease in momentum. And we're coming up on that neckline there. And if we break below it, I would say we're going to have multiple months to the downside for Ethereum. Now, everyone's going to be wondering, how low can we go for Bitcoin and Ethereum? For Bitcoin, I'd say, somewhere along that 200, the 200 week SMA, around 21,000, 22,000, something like that, is a possible area of interest, at least for good accumulation levels, right along there. It's very possible at this point. For Ethereum, it's a little bit less obvious where we might go, but you could be looking for levels like $1,000, $1,500 ETH for accumulation. Somewhere along those lines is a possibility, right? Because keep in mind, guys, we have a lot of time until the next Bitcoin halving, right? We have a lot of time to play out some downside, some sideways action, accumulation before the next major bull market. So, there's no real rush here to take risk. I mean, it's almost actually a risk-off environment for the time being, especially seeing that the Fed is raising interest rates and that the US dollar index has not lost any momentum yet, guys, right? We're actually, this is the weekly chart. We're still green here. We're still going parabolic, right? And so it's very dangerous to bet against something that has momentum, and the US dollar index has momentum. And we're getting above all previous historic levels from the past 5 years, right? So we may see actually continued moves up for the US dollar index, and maybe we would look to, create some kind of formation at higher levels before seeing a rejection, which means that we may see assets, sort of consolidating at lower levels for the next year or two, right? I think that something like that is more likely for the US dollar index. Hanging out at higher levels, assets like Bitcoin will likely consolidate at lower levels until we reach the time of the next halving, pretty much. Most people at this point are pretty uncertain, and there's not much confidence. And when there's not confidence, it's very hard to find bullish speculators. So I think a lot of speculators are probably going to be holding off on taking risk until we see lower prices and we see things kind of cool down in the stock market. But that's really it for me today, guys. I hope you enjoyed this video. If you did, smash the like button, subscribe to this channel, and I'll see you all in the next video.